In this video, we'll show you 3 cybersecurity stocks that AI insiders are quietly loading right now before the rest of the market fully understands what's coming. You're going to learn why the explosion of generative AI is creating an entirely new layer of security demand and which companies are positioned to dominate that shift for years to come. These are deeply embedded infrastructure businesses that sit at the core of how digital systems operate, protect data, and scale safely. They benefit from long-term contracts, high switching costs, and massive enterprise dependence, which creates powerful compounding potential over time. Let's start with the first company, and arguably the most dominant cybersecurity platform in the enterprise space today, Palo Alto Networks, ticker symbol PANW. Before we talk numbers, you need to understand why this business matters so much right now. The rise of generative AI is not just increasing data, it is increasing complexity, attack surfaces, and vulnerability at an exponential rate. Every AI model, every API connection, every data pipeline introduces new points of failure, and enterprises are realizing that traditional security tools simply cannot keep up. Palo Alto Networks is positioned directly at the center of this shift because it is no longer just a firewall company. It has evolved into a full-scale cybersecurity platform that integrates network security, cloud security, and AI-driven threat detection into a unified ecosystem. That platform approach is the key to its moat. Large enterprises do not want to manage dozens of fragmented security tools anymore. They want consolidation. They want one vendor that can protect everything from their data centers, to their cloud workloads, to their remote workforce. And once Palo Alto is embedded across an organization's infrastructure, switching becomes extremely difficult. This creates strong customer lock-in and recurring revenue visibility. Now layer AI on top of that. As generative AI expands across enterprise workflows, companies need real-time detection of threats that evolve faster than human analysts can respond. Palo Alto has been investing heavily in AI-driven security operations, using machine learning models to detect anomalies, automate responses, and reduce response times from hours to seconds. This is not optional anymore, it is mission-critical. From a financial perspective, Palo Alto Networks continues to show strong growth and operational leverage. The company has been consistently expanding its annual recurring revenue, driven by its next-generation security platforms and subscription-based services. One of the most important shifts to understand is how much of Palo Alto's revenue is now coming from its platform offerings rather than legacy hardware. This transition improves margins, increases predictability, and strengthens long-term customer relationships. The company has also been aggressively pushing what it calls platformization. Instead of selling individual products, it bundles multiple security capabilities into integrated offerings. This not only increases deal sizes but also makes Palo Alto more central to the customer's security architecture. And here is where insiders are paying attention. As enterprises rush to adopt AI, they are not just buying compute power, they are rethinking their entire security stack. And in many cases, they are consolidating vendors. Palo Alto is one of the biggest beneficiaries of that trend because it can replace multiple point solutions with a single integrated platform. That drives both revenue growth and market share expansion. Another key advantage is the company's scale. Palo Alto operates at a level where it can invest heavily in research and development, acquire smaller innovative companies, and integrate those capabilities into its platform faster than competitors. This creates a flywheel effect. More customers lead to more data improves AI models, better AI improves threat detection, better detection attracts more customers, and that cycle continues to compound over time. Now let's talk about profitability. Unlike many high-growth tech companies, Palo Alto is not sacrificing everything for growth. It has been improving margins while still investing aggressively in innovation. This balance between growth and profitability is exactly what long-term investors look for. The company's ability to generate strong free cash flow also gives it flexibility. It can reinvest in the business, make strategic acquisitions, and return value to shareholders without relying heavily on external capital. So when you step back and look at the big picture, Palo Alto Networks is not just a cybersecurity company, it is becoming a core infrastructure layer for how enterprises secure AI-driven environments. And that is why it continues to attract smart money. If you're getting value from this video, hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now let's move to the second company, and this is where things start to get more aggressive in terms of growth potential. SentinelOne, ticker symbol S. If Palo Alto represents scale and platform dominance, SentinelOne represents the next generation of AI-native cybersecurity. This company was built from the ground up with artificial intelligence at its core, not as an add-on, not as a feature layered on top of legacy systems, but as the foundation of how its entire platform operates. And that distinction matters more than most investors realize. Traditional cybersecurity solutions often rely heavily on human analysts to detect and respond to threats. But in an AI-driven world, the speed and complexity of attacks are increasing beyond what humans can handle manually. SentinelOne's approach is different. Its platform uses autonomous AI to detect, analyze, and respond to threats in real time without requiring constant human intervention. This allows organizations to scale their security operations without scaling their workforce at the same rate. That is a massive advantage. As companies adopt generative AI and expand their digital infrastructure, the volume of potential threats increases dramatically. SentinelOne's autonomous model is designed specifically for that environment. Now let's talk about the product ecosystem. SentinelOne started with endpoint security, protecting devices like laptops, servers, and mobile systems. But it has been expanding into cloud security, identity protection, and data security, moving toward a more comprehensive platform. This expansion is critical because it increases the company's total addressable market and allows it to compete for larger enterprise deals. Another key factor is its data architecture. Because SentinelOne's platform continuously collects and analyzes data across endpoints and environments, it builds a rich dataset that improves its AI models over time. This creates a feedback loop where more usage leads to better detection, which leads to more customers. From a financial perspective, SentinelOne is still in a high-growth phase. The company has been delivering strong revenue growth as it gains market share, particularly among enterprises looking for modern, AI-driven solutions. While profitability is still evolving, the focus is on scaling the business and capturing as much of the opportunity as possible. And this is where insider interest comes into play. Smart investors understand that early leaders in AI-native cybersecurity can become major players over time. If SentinelOne continues to execute and expand its platform, it has the potential to grow into a much larger company than it is today. However, this also comes with higher risk compared to more established players. The company is competing against larger, well-capitalized competitors. It needs to continue innovating, expanding its product offerings, and improving its financial profile to maintain its momentum. But that is exactly why it is interesting. You are not just buying a current leader, you are buying a potential future leader that is aligned with the direction the industry is heading. Now let's move to the fourth and final company, and this one sits right at the intersection of cloud, AI, and enterprise security. Zscaler, ticker symbol ZS. To understand Zscaler, you need to understand one of the most important shifts happening in cybersecurity today. The traditional model of network security is breaking down. In the past, companies protected their systems by building a secure perimeter around their networks. But in a world where employees work remotely, applications run in the cloud, and data flows across multiple environments, that perimeter no longer exists. Zscaler was built for this new reality. Its core concept is zero-trust security. Instead of assuming that users or devices inside a network are safe, zero trust requires continuous verification of every user, every device, and every connection. This fundamentally changes how security is implemented. Zscaler's platform sits between users and applications, acting as a secure gateway that inspects traffic, enforces policies, and prevents unauthorized access. This allows companies to secure their operations without relying on traditional network architectures. And as AI accelerates digital transformation, this model becomes even more important. AI systems often operate across distributed environments, accessing data from multiple sources and interacting with various applications. Securing these interactions requires a flexible, cloud-native approach, which is exactly what Zscaler provides. From a competitive standpoint, Zscaler has a strong moat. Its architecture is difficult to replicate, and its early mover advantage in zero trust has allowed it to build deep relationships with large enterprises. Once a company adopts Zscaler's platform, it becomes deeply integrated into its operations, creating high switching costs. Now let's talk about growth. Zscaler has been consistently expanding its customer base, particularly among large enterprises that are undergoing digital transformation. Its revenue model is subscription-based, which provides recurring revenue and strong visibility into future growth. One of the most important drivers for Zscaler is the increasing adoption of zero-trust frameworks across industries. Governments, regulators, and enterprises are all pushing toward this model as cyber threats become more sophisticated. This creates a long runway for growth. From a financial perspective, Zscaler has been investing heavily in expanding its platform and scaling its operations. While this impacts short-term profitability, it positions the company to capture a larger share of the market over time. And similar to the other companies we discussed, AI plays a key role here. Zscaler is integrating AI into its platform to enhance threat detection, automate security processes, and improve user experience. This allows it to stay competitive in an environment where threats are constantly evolving. So when you put it all together, Zscaler is not just a cybersecurity company. It is a foundational layer for how modern enterprises secure their digital operations in a cloud and AI-driven world. Now let's step back and look at the bigger picture across all four companies. You have Palo Alto Networks, which dominates with a broad platform approach and deep enterprise integration. You have SentinelOne, which represents the next generation of AI-native cybersecurity with massive growth potential. And you have Zscaler, which is redefining how security is delivered through zero-trust architecture. Each of these companies is approaching the cybersecurity opportunity from a different angle, but they all share one thing in common. They are positioned to benefit from the same underlying trend. The rapid expansion of artificial intelligence is increasing the need for advanced, scalable, and intelligent security solutions. This is not a short-term trend. This is a structural shift in how technology is built, deployed, and protected. And that is why insiders are quietly paying attention. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Now here is a question for you. Which of these companies do you think has the strongest long-term advantage in an AI-driven world? The platform dominance of Palo Alto, the ecosystem power of Alphabet, the AI-native approach of SentinelOne, or the zero-trust leadership of Zscaler? Let me know your thoughts in the comments. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.